Friends, let me move to the next idea that I wish to share with you as an insight this morning, and that is the threat of the surcharge net. And as I have written, let surcharge not spoil your tax planning party. Friends, just see the burden of surcharge on income tax. Of course, we know that up to 10 lakhs, it is 31.2, and up to 50 lakhs, it continues to be 31.2. Well, this is what we've lived with all along all these years. But in the last couple of years, since this fancy animal of surcharge, has peeped in, it has really become a party pooper. Imagine, friends, the moment you cross 50 lakhs and up to 1 crore, you are at 34.32. So straight away, against 31.2, it's a 10%, hike and jack there. 1 to 2 crores, 15% surcharge. 2 to 5 crores, 25%. And, I really shudder for those above 5 crores with the 37% surcharge on income tax. Just imagine your turban is bigger than your head. You know what happens? 30% income tax, 37% surcharge. That takes you to 42.74. So now the planning for those in the higher brackets, your real planning would be to ensure how you can, cut your pockets on surcharge. Because it's all a game between 31 to 43. It is in this spread of 12%, where can you remain and how best can you save taxes? Let us see in the next example that I'll try to take. I have said master code to lighten the tax load. Now share your income to lower your tax rate. Friends, this golden rule of tax planning, will have to become an insightful, focus for you. And what I have tried to point out by the example here, let me explain, is that you can go for a straight tax saving of around 10% just with some simple alignment. What will you need to do? Let us take this family with 3 entities, Mr. X, Mrs. X, and X HUF. So the tax load before income sharing, today, this is what is the pattern of your income: 120 lakhs, 60 lakhs, 20 lakhs. I put what is the tax payable in the next column. And friends, the average rate ranging from 34% going down to 21.45. And the family average on the income of 2 crores, as you will see on the left-hand side, the tax is 63.55 lakhs with an average rate of 31.78%. Please keep this in mind. Now, the tax load after income sharing. Suppose you are able to, because there will be, some incomes about which you can't do anything, like remuneration or rent, etc. But investment incomes, capital gains, these are things which you can easily, ensure that you can switch into the other tax entities. Now, this very income of 2 crores, if you are able to realign, say with one entity more, I'll explain, Mr. X should try to go below 1 crore, because crossing 1 crore means you are straight into the next bracket of surcharge, and you don't want to get into that. Mrs. X, she's above 50, why can't we bring in her into below 50, 45 lakhs? So she will also gain. The HUF, you can raise the income, ensure. So the idea is the spouse, Mrs. X and HUF, they remain below 50 lakhs. Mr. X tries to come in below 1 crore. So, your Lakshman Rekha is where you cross this. And therefore, this is what you have to keep in mind. Now, since this family, they have 2 children, 2 minors, you can think of what is still a very valid, it's a good old tax planning, but it assumes a lot of significance even now. I am not going for a discretionary trust with the maximum tax rate. I'm doing still the elementary basic of having a discretionary trust for 2 minors. Obviously, the minors do not have any taxable income, and therefore they would attract ordinary rates. The trust would attract ordinary rates because there are only 2 conditions under 164, that the minors do not have taxable income, which is obvious, fulfilled, and they are not beneficiaries under any other trust. Then you get the benefit of ordinary rates. So you can bring in 20 lakhs more, which will take you to now look at the average rates. You know, they've plunged down from 34, 32, from 30.75 to 26.87, and the family average goes down by a good over 3%. That means you will see, friends, your tax before income sharing was 63.55. You have been able to bring it down to 57.37. Same income, almost same entities, some insightful, smart, strategic tax planning, and you are able to save a good 10% over 6 lakhs. Well, I hope that works for all.